All right, ladies and gentlemen, buckle up. Today's video is going to be important and it's going to get right to the point. We've been looking for a face melter of a rally that the freight train would hit. Remember? Well, it came and it hit. It hit pretty hard. We're going to map out some levels to watch if the market wants to continue to press on this, because in 2022, there's something a very similar type analog. And from a psychological standpoint, you really need to understand how that played out. So we're going to walk through that today. We're going to get into the market conditions and obviously the expected moves for you more tactical traders on today's Stock Market Brief Show, which is brought to you with my partners, Interactive Brokers. So make sure to check out their campus. They offer a lot of tools, resources, free courses for technical analysis, for options trading, etc., for futures trading, you name it. And obviously my patrons, for $9 a month, they get all types of benefits. By the way, if you sign up for the Patreon, you need to sync the Discord up to the Patreon account in order to get access to all the benefits. I plan on making a video that goes through all these things because there is a lot on there for the $9 a month, or you can save annually by signing up for the annual thing. Let's get into today's show. All right, welcome back, people. We're going to get right into it today. 11 sectors that make up the S&P 500. We had consumer discretionary tech leading the way. Very risk-on type day. You saw the move in Tesla. Don't need to beat the dead horse, so to speak, here on that. S&P 500, all these products up. VIX was down. If you remember the weekly chart, how when we get extended from the weekly 5 EMA, you're likely to see a snapback, right? We've been using the analogy of a rubber band, right? Things get stretched, they typically snap back, right? And if things get really crazy, right, this rubber band might snap, but we always come back to tag it. We got very extended, boom, there you go. There's the snapback into it. We've seen this countless times. Where can the rally go to? What are some key levels? I think it's important to pay attention to the analog of 2022 just so you understand the psychology behind a rapid rally and if it were to reverse and continue to the downside. Now, obviously, there's going to be people that say, well, 2022, oil was doing XYZ and we had the war and this and that and this time is different. I already know that. So just if you want to leave a comment, think of something a little bit more creative. We had the false breakout over here in 2021 going into 2022, okay? This is what's so interesting. Bam, we broke out to new all-time highs. People get excited. Bull trap. We sunk off 12.5%, okay? But what's more important here is that we're getting below the 200-day moving average, or the 40-week, the 30-week moving average, and a declining 10-week moving average, which is roughly the 50-day moving average. And we saw a massive snapback. Now, where did that snapback come to? It got back above the 40-week moving average, the 20-day, or the 200-day, got back to the 30-week moving average, and got back above the 50-day moving average as well. Overall, what was that? It was a 50 to 61.8% retracement of this massive sell-off. So we saw a massive rally back that ended up getting faded quite later. Now, why is this interesting to me? Well, because we just hit new all-time highs right here, broke out, right? We're probably one of the only channels that we're talking about the possibilities and the probabilities of a bull trap, meaning that we'd break out and we'd fade. So if you want to go watch those videos, go on my YouTube, go back to when it happened and watch those videos leading up to it. And then we sunk off very quick and aggressively as well, 10%. Right? Over 10%, 10.5%, 11%, whatever. Okay. Now we started to a bounce back. So what can be a level above us if we're going to see this same type of analogy, same type of psychology, where obviously what I'm talking about is we're super greedy up here. People don't realize that we can have a bull trap. Then when we get down here, all of a sudden everyone's bearish and the market's going to break down to 1929 and blah, 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 blah. And then all of a sudden we get a snapback rally, and those same exact people then are trying to think about, oh no, my FOMO, now I got to get in. And they typically get in when the market starts to turn back over. Okay. That's the data that we have right now. So if I were to map out the golden zone, right, the 50 to 61.8% retracement from this high to this current low, that would bring the S&P 500 to and around this 590, which is an interesting area, especially if you map this out on ES. Right? Do you remember that range that we traded in, that we talked about over and over again while we were chopping around in this just volatility zone in here? Well, when we finally broke out, we saw the squeeze bigger to the downside. And you can see if we were to come back into this 50 to 61.8% retracement level, that would be touching the underbelly of really this big box that we kind of had traded in for multiple months. So I think that this is going to be an important level to watch. If it's a strong move, you don't want to just chase into it. You gotta wait for consolidations and wait for the pristine times that offer good risk to reward to make sure that you're not just hopping in and FOMOing in, that you're prepared for turns. Like we've been preparing for a turn in the market, just like we prepared for a turn over here. And hopefully you managed to protect some of your capital on the way down and maybe caught a little bit of this move. And now we look for more strength to see if we can get to new all-time highs and produce higher. We don't know, and if you think that you do, well, you don't. That's just the reality of it. A couple interesting levels here. While we're rallying, this is a 65-minute chart of the SPY. Right over here is the all-time high anchor VWAP. Right over here was the handoff to the month to date. In the month to date, you can see we've tagged it, we've tagged it, we've tagged it. It acted as resistance. It started flattening out. Today, we got it back above it. And where do we come into? We came into the all-time high anchored volume weighted average price on a strong move. So if we get follow through, I'd still be watching for consolidations from this level to see if we can press up higher. If we consolidate ahead of time and we come back to the month to date, I would be looking for strength from the month to date VWAP, or maybe it undercuts it and then turns around. I call that a U-turn, right? Where price comes in underneath a key level, then turns back around, and then you could basically buy here. It'd be the same time as buying the dip over here, but you're just waiting out this, right? So you always want to wait to see what that strength looks like if we were to pull in. And if that's the case, maybe we go for another round 2 or round 4 or 5, I guess, because this was round 1, this was round 2, this was round 3. That would be round 4, whenever that, if that were to happen. That would be an interesting point level to look into. And if we get a strong move from that, maybe we come back and test the belly of that again to potentially head higher as well. Now, you may have heard the term island reversal. That's what happened in the Qs. We gapped down from this high over here. We had a lot of trade that took place right over here. We had our follow through day, right? Those were the days that we were talking about getting a little bit more exposure in on the Qs or the IWM, right? SPY technically didn't have its follow through day, but in all reality, if it's above 1%, I guess you can count it. So we kind of gave that some wiggle room there. But the Qs did, and the IW did. And this right here is an island reversal pattern, which marks potential turning points in the market. So if we were going to continue to the upside, where can we potentially go to? Well, take a look. Well, this was prior resistance. And once resistance was broken, it became support, right? And once support is broken, well, it could potentially become resistance again. And if you're looking at this in the context of this sell-off, well, where is this red zone, right? It was prior support, then it was prior support over here. Okay, this is actually about the 50% retracement level to 61% retracement level of this rally. So if we come into here on a strong move, a lot of FOMO is going to take place, but we don't know how price is going to respond in and around these levels, if it's going to reject and it's going to put in a lower high, or if we're going to consolidate, pull in, or maybe not even reach there, and then eventually start to break through these levels. So it's going to require patience. It's going to require the ability to really not hold high convictions. And if you're very confident about your convictions of what the market's going to do and you're wrong, you just got to have those kind of loosely held to be able to adapt with what the market can potentially do. Now let's take a look at the current market conditions, right? We look at the gamma flip line. The gamma flip line roughly is just above 5,800, 5,820 and some change. So we're still in negative gamma. This is where you can get buying into buying, selling into selling. This is where the crazy kind of rallies and the crazy sell-offs take place. So we're still under it. So that's check one. It's still a good trading environment as we're under that. But then we're above the 5-day moving average in the SPY, the Q, IWM, and so forth. And these are those are positive things. This is where you want to give more benefit to the bulls in the shorter time frame, because this is shorter time frames here. This is a more positive change in the market. We tied this with some oversold conditions. We tied this with the higher low in the semiconductors while these products were going lower. These are all kind of signs. And then we said various sentiment charts and so forth to kind of prepare us, saying, hey, if you're short here, you might be looking to cover. And we got a pretty nice move overall. Another element we've been watching was the VIX curve, the VIX futures curve. And right now, what's it saying? Well, we're in contango. We were in backwardation, and clearly the market was having its little tissy fit while we were there. It basically just states that, hey, there was more fear right now at this current contract than there was looking out into the future. Now it says, hey, yeah, we look to more fear in the future, like always. It's typically thing. We also talked about back month versus front month volatility, how it was getting under this 1.0 level and kept on diving. But we said anything under here, this is where you start to look for the market to rally and potentially, for it to market to potentially base out, to potentially bounce a little bit, because it rotates from extremes. And we're starting to see the rally, and this is starting to head higher. So what happens if we get to 1.20? This is 20%, which that means, right? Back month is 20% higher. And over the course of other times, we've noticed that, hey, when it gets up into these levels, it can be a kind of an overbought rally and things might need to just calm down or consolidate. For those that want to take a look at the gamma levels, the zero date levels, the ones that I keep an eye on, once again, take a look at gammalab.io, use code MSD50. They give you 50% off the first month. Pretty cool product. And you can build out a dashboard and you have all your news feed over here. Pretty cool stuff and ridiculous price. I don't think that there's any service on the internet that offers this type of stuff for that price. I think there's a lot of great services out there, but for $15 a month, you can simply just not beat that. Okay, and by the way, that's the one that I use for my Gamma Flip line if you always wanted to look at it and so forth, or zero date levels if you're a more active trader and so forth, or you can just watch this show and I try to update you as much as I can. Let's look at some expected moves. We'll start here with the S&P 500. So as we already previously noted, it did come into the all-time high anchored VWAP. And guess what? Today, day one, Monday, which if you remember on the last brief, at the very end, what did we say? We said that typically the outsized moves have been happening on Mondays. So we came into the upper weekly implied move. This, to me, it means that the market reached its happy spot. So if we start breaking above higher and we come into the daily zone tomorrow, right? The daily expected move for tomorrow, which is roughly 578 to about 580 up in this area. I would think that up in this area, we'll probably likely see a pullback into the weekly expected move, right? It's not a guarantee, but I think that that would be a high likelihood because from history, what it suggests is once we tag these weekly implied moves, just like we tagged the lower ones, we broke down underneath it. And we came back in and we doodled around. So to doodle around here makes sense. So a couple ways to approach this. If we don't break out tomorrow of this expected weekly range and we come in, well, guess what? Start looking at the lower daily implied move, the 5-day moving average in confluence with the month to date. Start to look for strength after that to potentially play it back up to there or even higher. And if it comes into this, I don't know if you necessarily want to short it or not, but if market net flow suggests it, or if you see how it's shaping up through the day, maybe then you can play back into here. But remember, the risk to reward is not great, right? If you're just playing back into here. But for the more active traders that know how to manage risk, that could be an option. The next level to watch for is last year's closing price, right? Once the price has memory. So watch the last year's closing price and watch how price kind of doodles around there. If we can get up there, maybe not by tomorrow, but maybe we're going to come back for that at some point here in the near future. That's about 586. Let's take a look over here at Qs, right? We're above that rising 5-day. We're well above the month-to-date VWAP right there. And we did not tag the upper weekly implied move. So my thought is if the Qs, if the big NASDAQ stocks can all of a sudden gain some more momentum, right? That means we can come into the weekly implied move. That is the move that's going to help drive us through and up to the daily implied move over here in SPY. Because remember, they're the same names to the extent, right? SPY is a cap-weighted index. They have the MAG 7 stocks in there, and Qs haven't reached it yet, but they're close. So if the Qs, right, if all of them want to start playing ball here, because if you look at this, Microsoft didn't really play ball all too much. It was Tesla that was playing big time ball, right? Meta did good, Amazon did good, Google did okay, Apple was all right. But if we're going to get the Qs to the upper implied move for the week, I think that that's going to drive the S&P 500 to there. And that's where we can look into confluences and potentially see price stall out in the meantime. And then we could kind of see how it digests, see how it consolidates, right? Say if it does come up there and doodles around here for the remainder of a week, right? That's quite a bit of time to digest. The 5-day moving average is going to turn up, right? The month to date is going to turn up, and maybe that sets up for another rally up higher to these higher levels that we kind of mapped out over here, for example, the Q's 500 to 510 is still some really good upside, right? It's not even on my screen, but that's still some really good upside. So I'd like to see how that consolidates and sets up, because you want to be a part of that if that's the case. And if it's going to break out higher, right? We don't know if it's going to stall out at those levels up here. We don't know if it's going to stall out or what it's going to do. But if we were able to play it up into there, that's great opportunity. And if it consolidates and if it doesn't get rejected fully and we turn it back around, these are all great opportunities to have some exposure into the market, but to manage risk effectively as you see fit. That's all I got for you in today's episode. Hope it helps out. I'll see you on the next.